Let's welcome on board Kunj Bansal as well and find out what he's making of the market texture right now. Kunj, while the index and the markets overall afternoon firstly look in great shape, wondering how much more headroom does auto as a sector have? You know, we were just chatting with an expert as well and wondering, given that most of these stocks have already, sitting at stretched valuations, if you were to compare them to their 5-year averages, what do you think? What's most undervalued and overvalued, if I can call it that, within the auto pack?
Yeah, so multiple things. One, of course, it's very difficult always to arrive at answers to these questions, but still, if one has to try, one has to look at the various facts, various numbers. So let me start top down first by the market itself. So we are almost every day we are hitting life high, which is a good thing. Today we are roughly 19,700 on Nifty. If we go back to March 23, we were around 16,800 or so. So from there on, almost 3,000 point rally in percentage term, it's a 16-17% sharp rise in the market in a short period of about 3.5 months. Let's just put it in the other context. If we go back about 21 months ago in October 2021, we had Nifty at around 18,400 then. And today we have Nifty at 19,700. So from there in 21 months, it's only a 6-7% rise in the market that has happened. So these are the two ways to look at it. Now, within that, coming sectorally, you talked about auto. Let me just put in perspective some numbers. If we look at last 6 months numbers, calendar year 23, or month till date, year till date, let's say 6.5 months. So we have seen that auto has been one of the outperforming sectors with about 24-25% return. As compared to that, let's say banking hasn't performed at all. I think 4-5% return in last 6.5 months. Obviously, multiple factors. One, the under participation, the undervaluation. Two, the money that has been coming in from global investors in last 2-3 months always looks as a starting point for the undervalued and under participated sectors, which is where it came in. The one sector, good thing about auto sector is we know monthly sales volume on an ongoing basis, and the support that has come in is from the metal prices correction that has happened. So that has led to this sharp rise in the auto and auto ancillary stocks also. Very difficult to say whether they have already become matured or overvalued or things like that. It all depends on how global flows continue, how overall market continues to behave. That will decide the other things.
Okay, fair enough. Autos, at least we do get the monthly data, but let's see how it progresses from here on. In terms of the other movers, well, you have seen some sort of improvement when it comes to the likes of all cargo logistics in the last few minutes. It's up around 6%, and then Gati, of course, from the logistics space is also doing all right. Kunal, do you track either of these names?
No. Okay, that was prompt.
An emphatic no coming in that no, I do not track these ones. But Kunj, what about you? Do you track the logistics space, warehousing, and all of these verticals? Anything that looks interesting at all?
So on a macroeconomic basis, if we look at it, we have been seeing the broader numbers going up. Trying to bring that down to the port volume, the logistics volume, there are mixed signals. So it's very difficult to take a one concentrated view saying that it is completely positive, no, and it's completely negative, no. It's a mixed signals which are there from the broader logistics sector in terms of the volume growth that has been there.
Okay, if Sharad is there, let's quickly take it across to him as well and get in all the buzz from the dealer's desk as well. And why is it that IGL is the one which is most talked about? Sharad?
Well, yes, in focus we are having IGL, and what we are hearing from the dealers is there is buying happening across the HNI counters, and also the average delivery volume that is coming at roughly 56% as compared to the daily average of roughly 46 odd percent. Now recently there was an important news flow also coming in as the company is having a JV with Genesis Gas International, where they'll be actually setting up an integrated smart meter manufacturing facility, and the total capex would be almost 110 crore rupees. Now the stock itself is up more than 30% 6% over the last 1 year itself. And recently, Citi came out with its report where they have maintained a buy rating for the stock, and the target price is set at roughly 560 rupees per share. Now looking ahead, especially for the Q1 numbers, what's the expectation? The expectations expected to come in with a strong set of numbers coming in, especially because the gas prices are stable, and because of that, the gas sourcing costs also will be favorable for the company. Apart from this, also due to the stability in the gas prices, it's expected that the car conversions, that is also expected to remain strong. That means a strong Q1 numbers are expected to kick in.
IT, that's the one which continues to hold out. Infosys up 3.5% right now. HCL, TechM, TCS, they're the ones which are actually managing to hold out in an otherwise, market which is almost giving up its gains. Kunj, is the worst for IT behind us? While the earnings for Q1 don't seem to be indicating that, the market definitely seems to be feeling so.
So again, always difficult to take such calls. But putting things in perspective, one, yes, the financial numbers, whatever have come in terms of top line growth on an year-on-year basis, have moved down from low double digit to high single digits. Now, let's keep in mind that that was in line with expectation, that was already built in terms of the management guidance, in terms of forecast, in terms of the overall analysis of the sector, because of the slowdown that has engulfed the global economies, specifically the US and the Europe. And as a result, the caution that has come in the working of the corporates who are customers for the IT sector of India. Irrespective of the growth having come down, the fact remains that it's a net profitable sector as a whole, net cash generating machines, the companies that are there in the sector. Good dividend distribution for those who want. Of course, in terms of the yield, those numbers come out to be very low, but in terms of payout ratios, those are really good. Now, there was an inflow in the market continuously. The new money coming in does keep looking for sectors on a rotational basis by looking at multiple factors. So it does look at fundamentals, it does look at valuations, it does look at shorter term participation, which leads to shorter term performance or underperformance. Now, which is where IT sector seems to have come in, that while indeed the quarterly numbers were or are not expected to be great, but at the same time, they are in line with expectation. In general, the overall long-term financials of the sector historically have been good and are likely to be good going forward. But there was an under participation and under ownership, which led to buying that seems to have happened. Will be very difficult to predict if the worst is over or if the best is yet to come.
Yes, a bit of under participation that was there when it comes to the IT.
But in this demerger would be July 19. Now, the ratio for this demerger is 1:1, which means that for every one share of Reliance Industries, the shareholders will get a new additional share of Jio Financials. Now, the listing date for Jio Financial is still not known. Now, what we know about Jio Financial is that the chairman and the CEO of this company are both ex-ICICI Bank leaders. It's KV Kamath, who will be the chairman of Jio Financial, and Hitesh Sethia, who will be the CEO of Jio Financial. Now, what will Jio Financial do? It will provide lending services to consumers, merchants, and it will expand in other verticals as well, like insurance, broking, payments and asset management. Now it aims to build a large digital fintech platform for all Indians, and going ahead they're also open to bring in strategic and financial partners in the company. Now, when it comes to the valuation part, Jio Financial will be owning around 6.1% stake in Reliance Industries, which is the treasury shares, and the value of this treasury shares stand at close to 1.1 lakh crore. Apart from this, the company would have a net worth of close to 28,000 crore rupees. So based on these numbers, what we understand is the company's book value would be close to 200 rupees per share, and brokerages have assigned a value of around 168 to 190 rupees per share when it comes to Jio Financial. On the listed side, Jio Financial will be competing with Bajaj Finance, Paytm, PB Fintech, Angel Broking, IIFL Securities and Paytm, as I just mentioned. And on listing, what we understand is that Jio Financial's market capitalization would be close to 1.4 lakh crore rupees, which means that the company would be the fourth largest financial institution listed in the Indian stock market. Now, how could Jio Financial benefit? Now, it is most likely to have a AAA rating similar to its parent company, that is Reliance Industries, and this AAA rating will help the company get the cost of funds on the lower side. Now, only 6 large NBFCs in India have a AAA rating, and Jio Financial would be one of them. Apart from this, given the fact that Reliance Industries retail arm has a very large distribution base, the company will benefit from that also, because Reliance Retail has more than 18,000 stores in India and nearly 78 crore footfall on an annual basis. Apart from this, the telecom business is also the largest in India of Reliance Industries with around 43 crore telecom user base. Now, what would be the impact of this demerger on the indices and the FNO? Now, the FNO contracts of Reliance Industries would expire on July 19th. On Nifty and Sensex, if you see, Jio Financial would be a part of the index at a constant price. And how will this constant price be discovered? Well, the opening price of Reliance Industries on July 20th minus the closing price of Reliance Industries on July 19th, the difference amount will be the constant price. On MSCI, it would be a part of the standard index, and on FTSE, it would be a part of the index if the listing is happening 20 days post the demerger.
Okay, that's all the update that you need to know about Jio Financial and the demerger that's going to take place this week itself. But Kunal, on the charts for Reliance.
Yeah, now I think it's just about 1% away from its all-time high. 2856, I think, is the all-time high for Reliance Industries. Again, a very good pickup in the last few days of price action. Hopefully, post the event, we can expect that the stock would continue to march up higher. Of course, on an adjusted basis, I would probably expect that hopefully in the next couple of days, the stock can come back towards not just breaking past about the previous major highs or lifetime highs, but even climbing up another 100, 150 points in the next maybe one and a half odd weeks. So would be bullish on Reliance Industries, and post the event on a price adjusted basis, we could expect another 150 points up move.
Sure, that's the word in Reliance, very close to those life high levels as well. But we did speak to the managements of a lot more buzzing stocks. Datamatics, for instance, that was up in double digits at the start of the trading session. And Route Mobile, which was the big volatile stock yesterday, ended with a cut of almost 17-18% from the day's highest point, holding up in the green today. Let's listen into the management of Datamatics as well as the buyer of Route Mobile now, Proximus.
The focus here is going to be first to close that deal, then to deliver the synergies. That will be really the main focus of the management teams. I think we will see where we go with the MTO and after the completion of the MTO. But I would be equally happy to stay listed in India or to be able to take private the company. I think there is no issue for me to stay with minority shareholders. The idea is really to build on the Rajdeep Gupta ability to execute and expertise, so that Rajdeep will be the CEO of we will remain the CEO of Route Mobile, but also we lead the CPaaS business for the entire Proximus group.
Quarterly results and annual results, the concentration is very sort of controlled. Is very healthy actually. The top 5, the top 10 is fairly evenly spread, and we are not dependent on any single large customer. I've been traveling a lot, meeting customers in Europe, Middle East, and the US. And I see no signs of any kind of slowdown in those markets. Customers are equally positive and robust about their own outlook and prospects and their relationship with Datamatics.
Okay, so that was about some of the buzzing managements, but let's get the BTSC ideas also from our chartist. Kunal, you go first.
So a couple of buy calls. Ipca Lab is the first stock which I would suggest as a buy. The stock is trading at 790 approximately. Still, not confirmed a breakout on the charts, at least on a swing basis. So expecting the same for the stock, 828 as a target, stop loss at 777. And Z Entertainment, a stock which is down some 2.5% today. I think that could be a good contra bet at current levels. The stock has come back towards a decent support of 220. So keeping stop loss of 215 would suggest a buy with a target of 236 on Z.
Naresh, what about your BTST trades?
So first would be a buy on Hero MotoCorp, closing very near to the highs of the day, as well as holding on to the 3050-70 support mark, expecting a follow-up move in the near term. Stop loss at 3080, target price of 3150. Second is a buy on Bosch Limited. The stock did see a spike towards 19,600 in the morning. At 19,150, 200 looks like setting up for an eventual breakout. Stop loss at 19,000, target price of 19,800.
Okay, so that's the take coming in. But Kunj, wanted your take as well regarding some of these counters and sectors which are doing well in the trading session. This entire consumer durable space, of course, smart metering is one thing which has been, giving quite a bit of push to the likes of Genus Power, HPL Electric, etc. But then there was this note that came from, UBS this morning as well, saying that even though Havells hasn't delivered as yet, the prospects look better because the capital allocation is getting better. Your take?
So what is happening is in the last 10, 15 days or so, if we look at suddenly the monsoon all over the country has come out in a reasonably good quantity and distribution. In fact, quantity has become excess at some places, which is bad, but that's what it is. Coming back, so that is something that earlier was expected, that there is a threat of El Nino and there is climate change and what will happen to the rains and all. So there was a kind of a despondency in general in the investment sentiment. Now, with the monsoon coming in, that has changed, number one. Number two, we are seeing the global inflows continuing to come in. Coming back, so because of the monsoon expectation, the rural slowdown that has been there impacting the Indian economy, I think for now, more than 1 year or so, there is an expectation that that should hopefully go away. And which is where the consumption oriented companies are seeing some buying interest coming in, both consumer durables as well as non-durables. The short-term results will, for some of them, have come in, which are reasonably in line with expectations. For the others will come in, which will be worth watching. But the important point will be that margins for all companies are expected to improve because the raw material prices have been on a continuous decline, certainly on a year-on-year basis, in some cases on a quarter-on-quarter basis. And that's why we are seeing this kind of interest.
Now, just a word on the index, and to the point that you were making earlier this morning, that there is still lack of euphoria right now, which is why you have reason to believe that the market may have further legs to go.
Well, yes, and so we started off with the discussion on how the global markets are poised. Gold is exactly at 58,000. Bitcoin has no movement. Dollar index is at 9,900 levels. You see the construct of the global equities. The Dow Jones is yet or just about to come out of a 10-month of consolidation, nowhere close to its previous major highs. So when you look at the construct of the global markets, the setup is very gradual recovery across the globe. So we are not yet hit the euphoric zones in any of the asset classes. Then we go back to our market construct. Look at the last 3-4 months of the price recovery. We've seen every sector participate in phases for the markets. So in every 500 points, 700 points up move on the index, we've seen one sector leading and the other sector that it tends to lag. In the next 500, 700 points, the leader of the previous rally generally gets a rest. So these are the kind of this is the kind of a construct which we see in the first stage of a bull market. Euphoria is not yet creeped in because we don't tend to see a strong follow through for stocks. So if a stock is up 20%, for example, on a day, we don't see the same 20% gap up move for the stock in the subsequent day. So when you see such kind of euphoric moves, that's where we tend to ascertain that the markets have gone into a bit of an overbought territory. As of now, we are not seeing any of those signs. Just a classic example, yesterday the Bank Nifty was up some 700 points. Today it's down 100, 150 odd points so far. So that itself tells you that we are nowhere close to the euphoria in any of the indices as well as in sectors.
Kunj, quickly, we're just in the last 2.5 minutes of the trading session, but a word on the MFI sector because that continuously has seen a re-rating and now analysts are saying there are further legs as far as that goes. Any name that you like, Fusion, Spandana Spurti, any other name?
So more than the names, I think again going back to the fact that we are seeing an overall expectation of rural economic recovery based on the good monsoon that has happened in last 15 days. So that is what is leading to all the rural economy oriented sectors. We were talking of consumers earlier. Now you are talking of microfinance. Also, obviously in the last quarter numbers that came in for the March, there was some improvement in the broader numbers in terms of asset quality for these companies. The same is expected to continue in the June quarter. The fact remains that we are seeing continuous inflow of the global institutions, global money. So they are continuously looking at the sectors on a rotational basis. And all these things put together make it a sweet spot.
Okay, Kunj, let you go on that note. Thanks as always for taking the time out and joining in. Let's